Good afternoon and welcome to the Light Science Technologies Holdings PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Simon Deacon, CEO. Good afternoon, sir.
Thank you very much. Good afternoon, everybody. Welcome to Light Science Technology Holdings PLC final results for 2022 and where we are going for 2023 and where we're up to. So if we can go to the first slide then Andrew. Presenting today from the team is Jim Snooks, Chief Financial Officer and Company Secretary, Andrew Humpsall, Chief Operating Officer, and myself, Simon Deacon, Chief Executive Officer. Just to give you an overview of the group for those who don't already know us, but in the group there is two companies, trading companies, UK Circuits Electronic Solutions based up in Manchester, a business which is over 25 years old and is in the contract electronics manufacturing, which we'll call CEM through this presentation. And on the other side of the business is Light Science Technologies, which is in the controlled environment agriculture, which we'll call the CEA market. This business has been going just over 3 years and is award-winning in smart technology and ag tech for that controlled environment of agriculture. Just some highlights for the business. We've grown in revenue terms 46% from 19 to 22. So we're a growth company and we're in two different key sectors of the market. And the synergies here between the two companies really are, we've got a manufacturing side. We do all our manufacturing based up in Manchester with just over 70 employees in that business. But on the Light Science Technology side, we're really pushing the boundaries with new lighting recipes and lights, which I'll talk through the presentation, but also sensor technology, and which will eventually go into AI, and so that it controls the environment that we're working in. But also moving into the advanced grow system, which I'll run through, which talks about all the different elements of extending the growing season. So we've got 3 product ranges which we launched last year. We shipped over 500,000 products in 2022 and we're multi-award winning. But also we had our biggest turnover last year in November, turning over just over £1.2 million in the group also. Okay, thank you, Andrew. So I'm going to hand you over to Jim, who's going to talk to you about 2022's results.
Thank you, Simon. So showing a 4-year window from 2019 to 22 here, Simon mentioned that 46% growth in revenue across that window, with a 10.5% growth from 21 to 22, which was very encouraging and underpinned by the platform business, which is UK Circuits in the contract electronic manufacturing sector. It was a challenging year. There's no doubt about it. 22 was a very challenging year. We were coming through the back end of COVID and then the Ukraine war and ensuing energy crisis and hyperinflation that resulted from that. And, you know, like many other businesses up and down the country and in the world, that was something that, you know, wasn't anticipated. And, you know, it's doubtless it had an effect on both divisions. You know, we had record sales within UKC, but margins were down on that expected, really down to supply chain issues. It's a difficult equation, negotiating pricings with customers when you're in a volatile supply side market. So margins weren't where we wanted them to be, and we put a lot of work in the back end of the year to get them back on track. And I'm pleased to say that those actions are resulting in what we expected as we move through this year. So difficult times on the CEA side, elongations of sales cycles, where pipeline remaining very strong. We've got a current pipeline at the moment of 43 million plus 18 million orders and contracts in place throughout the group. And so that pipeline's remaining very strong, but it's elongated, and there were delays in decision making simply because growers didn't have enough definition on pricing, in particular energy pricing, as we went through 2022. We see prices stabilizing now, so as we move through 23, we're anticipating conversion of that pipeline, and particularly as we move into 24. Would you move the slide, Andrew, please? Looking at the balance sheet, notably big investment in the sort of product development on the CEA side. Those ranges that we launched, Sense to Grow, Advance Grow, and Nurture Grow, you can see between 21 and 22, £500,000 investment in capitalised development costs there. Non-current assets, remaining non-current assets, really stable. That's the properties up in Manchester, UK Circuit, and down here in Derby, and all the plant, machinery, equipment and lab capitalised costs there. In terms of current assets, accepting cash, we did see an increase in stock levels, and that was to try and offset some of the supply chain issues that I mentioned a little bit earlier. It's a fine balance between overstocking and mitigating, volatility in the supply side. So we saw somewhere in the region of 300,000 increase in stock at the back end of last year, and cash from IPOing back in October 2021 to the end of the financial year 22. You can see the position moved from 3.8 to just under 600,000, and that was the result of development in products, marketing, IP, all the other elements to get our products to the state of development so that we could get them into market and get them commercialized. Moving on for the focus for 2023, well, there's a number of areas that we see as absolutely vital here. Increasing revenue further and continuing the growth. We see really good opportunities in both divisions, actually, for continued growth. Margins, getting those margins back in the CEM division, the Contract Electronics Manufacturing division, back to where we would expect them to be. Reducing overheads, both in the holdings company level and Light Science Technologies, to tailor to what level we're operating at. It's not to hamper conversion and prospects there, but we're just making sure that we control costs very carefully so that ultimately one of our key aims is to become cash generative. And the plan is, as we move through 23 and into 24, as revenues start to ramp and that cost control takes effect, that we'll move into a position of cash generativity. We are looking to launch the developed products we've got also into broad geographical markets and new sectors, and Simon will talk a little bit more about that as we go through the course of the presentation, as well as creating global partnerships with people like Dyson Farming. And again, Simon will expand on that as we move through the presentation. Up at UK Circuits, we're continuing to invest in automation and modernisation of their systems and equipment. That will allow us to move into new higher sectors of the CEM market, areas potentially like medical and such higher requiring areas for sophistication of plant and equipment and quality standards. So, we see not just organic growth within UKC, but also moving into new sectors there. And importantly, alongside organic growth throughout the group, we are actively exploring acquisition opportunities. So if I can hand back to Simon at this point.
Thank you, Jim. So let's just talk about the market opportunities for the group. There's an estimated combined market opportunity of just under 30 billion up to 2030 for the group, which this really gives us a really good opportunity to look at the market and where we see fit to put the products into and get the most traction throughout. So the Grow Light side of the business, our Nurture Grow product, the market opportunity there is 1.7 billion. And this is about a recipe of light to grow certain crops throughout the year. And that growth rate is a CAGR of 21.1% from 2020 to 25. The other side of the business, where is agricultural sensor side of the business, is 2.1 billion. And that's got a strong growth rate as well of 11.4% from 2018 to 2026. So we can see real growth there in both of those areas, and our advanced growth system fits into the same markets as well. So it gives us a really strong growth and something to attack going forward. And that really is demonstrated in our group pipeline of opportunity, which is 43 million pounds. So it gives us something really to go at. And we're doing this and doing quotes globally now. We've got circular of 18 million pounds in the forward order book, which is really strong. So we're keeping that consistency up in forward orders as well. So what's driving the global need for the improvement of food security and growth in UK-based manufacturing? Well, on the CEM side of the business, onshoring, we're seeing manufacturing returning back to the UK. Since the pandemic, we've seen a drive for more quality product, and that's why the drive, but also the shipping costs of moving goods around the world now has shot up in price. So manufacturing them locally is really important. You would have seen on the other side, food security. We all talk about food security, and we physically see it now in the supermarkets, where we can't get the fresh produce necessarily when we want it all year round, if it be tomatoes, cucumbers, lettuce shortages. We've seen it on the media in the past few months, and this will continue with the environment changing, climate change, where imports of food, we currently import around 70% of our fresh produce into the UK, and this can't continue. So growing it locally is really important to what we do and the products that we support globally. We've obviously got a growing population, 10 billion people up until 2050. So a growing population, lack of soil to grow in, climate change, water shortages. We've seen droughts last summer here in our own country, as well as in Europe and other countries around the world. So it's really had a big impact. And obviously Ukraine and the cost of living crisis has also hit us. Thank you, Andrew. So just running through the product range, what we sell in the controlled environment of agriculture, and looking at our energy efficient products, which increase yields and profitability for the growers. We have Nurture Grow, which is our lighting range. We have well over 100 different types of products, so that you can grow from above, from where you grow, put the light above the plant and it grows. But also if it's a stem plant, we've got products which grow and move, the light moves with the plant as it grows, which is really important for something like a tomato plant, or as it's a stalk plant. We have created certain recipes of light in that, which I'll come on to in the next slide in a minute. But it's a really important product range that we've got, which is unique and also got patents to it. But also it's really energy efficient, which is what the market's currently looking for. On the other side, we've got Sensor Grow, I touched on, a sensor product, which we've now got beta testing going on in the marketplace with growers. And this is capturing all the data that a grower might be growing in his environment. And really where we set out to do to help increase yields for a grower. This is now also turned, since the energy crisis, into monitoring the costs that it's required. So what does a plant require and when does it require it? So monitoring those costs and that data. So really important. And then the advanced grow, the semi-automated crop care, where we're extending, this is going into glass houses and polytunnels, we're extending the growing season, but also increasing the yields. And we've seen a really good increase in yields in the contract that we're doing with Zenith, which is really good. Okay, Andrew. So just breaking it down, the Nurture Grow product, what is it? It's a modular, interchangeable design, and that's what makes it unique. This means that when it comes to the end of its life, the electronics come to the end of their life in 6 to 7 years time, you don't need to get rid of the product and put it into landfill. It is a recyclable product, which is really, really key in the environment today, but also it's reusable. So you reuse the body of the light and you change the innards of the light, which gives us a partnership with growers, so that when it comes to the end of its life, they're not just going out and looking for a different light. We can actually interchange the electronics within it, give them a new technology and new recipe of light for whatever they might be growing at the time, which really gives it its uniqueness and a long partnership with our clients. So it's modular design, it's sustainable, it's also a multi-award winning product, which we won in 21 and also recently in 22. Interchangeable, as I mentioned, and also an array of different recipes which we create here in Derbyshire in our scientific lab. Thank you, Andrew. So moving on to our sensor product, we're very excited about this. This product is on a subscription basis, on a 3-year contract with our customers. And we are putting this product in and it's monitoring the environment. You might say, well, what's the importance of monitoring? But it's about having information. Agriculture needs the information to be able to control what they're doing and when. Before, when we've had fertilizers, we spray the field or we spray the crop internally in a glass house or a polytunnel or a vertical farm, and we dose it. But what does the actual plant need? Having that precise data is really important, and that's how you can control your cost of what you're putting on to these crops. So it might be CO2, it might be water, it might be the nutrient, it might be the fertilizer that you're putting onto the land to make these crops grow. And so it's really important to have that data. And what we've seen with our clients is that there's a big saving in nutrients, which is shot up in price, and fertilizer costs, which have shot up. So they can control those and have a better product for it. The other side of it, we're really moving the technology on to do then root zones as well. So we've got air zones, we're moving on to root zones. But what we're hoping to do with this is then go open to open agricultural as well as enclosed. So we're doing enclosed at the moment, but then going to open. Our device, our sensor works off a battery. So it's rechargeable once a year. So we can swap these out. The data it collects, there's no cables to it, because it's battery operated, rechargeable, means that it can work 3 kilometers away from the device, pulling in that information to our software, back to the source. And then from there, we can tell the growers what they need to do, or it goes onto a platform, a digital device, and it will tell the farmer or the grower at that particular time what he needs to change in that environment, or to a control system where it will automatically change the environment for them, if that be opening vents, changing the dosage of the different nutrients going into the ground. We're working with partners, Dyson Farming Research, Emerald Research, Berry Gardens, and Tiptree, the people who make the small pots of jams you might see when you go to hotels. So it's really exciting to have those partnerships, and we continue that going forward into 2023. The advanced growth system is what we've been working on at Zenith Nurseries. It's a contract that we won for just over £13 million. So that goes through its gateways. But what we've seen here, which is really important, this is now operational, it's working. So we're getting those results, which are really important. But what we've seen is that we've seen a good increase, over 40% in increase in yields. And we did a trial in December, where we normally wouldn't grow the crops in December because it's too cold. to do so. There isn't enough light. And our advanced grow system grew a yield which was 40% more than it would normally do. It's in December. And this is what it's all about, extending the actual growing season, which is really important to make sure that we can start growing all year round and stop these imports. What we're doing here for 2023 is trying to get a commercial product out to supply the 4,000 UK growers which are out there in the country, which have got glass houses and polytunnels, and start semi-automating equipment. So rather than using tractors up and down into these environments, you're saving 25% of the area. So you gain 25% of the growing area, which is really important to do so, and also start reducing the labour. There's a big labour shortage in agriculture, and so it's one of the big feedbacks we've had from our clients is increasing yields, growing for 12 months of the year, and also reducing labour by having semi-automation. So really important to get that, and that's what we're doing there. UK Circuits Electronic Solutions, a company which is, been running 25 years. Year on year, we get growth from it. So we're looking at making sure increasing the margins is really important to us. We saw a drop in margin, as Jim mentioned, in 22. So we're now focusing and bringing that margin back, which is happening. We had our largest turnover month in that company in November. So over £1 million that we're doing in that particular month. But so we're looking at investing more equipment, automation equipment and technology, so that we can look at other clients who are further up the food chain, which will help us increase those margins and do bigger contracts. And so better equipment, improving the equipment in that facility. And that's really a very good backstay to our business, because it also manufactures our sensor product, our lighting products going forward. So it's really good to have that key business in our group. We work with customers like Rentokil, Switch2, Cloud, and some of these partnerships are well over 10 years old. And we recently renewed last year the contract with Rentokil going forward, which is a really important part of our business, broadening our relationship going forward. So we believe we've got a compelling market opportunity here for investment. We've got a good, strong pipeline, which is now over £43 million in the CEA and CEM market combined. We've got a circular of £18 million forward order book and contract value. And that's really important to keep that value going, because obviously we're having big months of turnover, of revenue months, and we're still managing to contain that revenue and that growth going through the business. And as I mentioned earlier, we've grown, in 2022, just over 10%, which is really important. Recurring revenue model in our sensor product and also in our lighting product. We've got a 3-year subscription model based there, and we've got some beta testing being done at the moment. And we're really excited about that sensor product, because it'll bring in AI and automation into some of these new real hybrid glass houses and vertical farms which are out in the marketplace. We've also made sure that we've got a family of pending products. So we're protecting our product range as we design and develop it and manufacture. And so we're always protecting that as we go into different global markets. Some of the recent achievements in 2022 are, we shipped over 500,000 goods last year. We've created global opportunities in America and Canada. We attended over 10 global events last year, and we continue to do so. We launched 3 key products in the controlled environment agriculture: the Sensor Grow, Advanced Grow, and Nurture Grow range. And we've won multiple awards for our products. So they're now being seen worldwide for our products, which is really important to get that notice around the world for different projects which are going on. We've also got our in-house lab and also our lighting testing facility, which is really important to be able to prove the technology that we do with our partners. and we're really getting some good traction now going into 23 and 24. Thank you very much. I'll hand you back, and hopefully we'll go through the questions now and answer some of your questions that you might have.
Perfect. Thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. But just while the company take a few moments to review those questions submitted today, I'd like to remind you that the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, we received a number of questions throughout today's presentation. And Andrew, if I could just hand over to you to read out those questions, I'll pick up from you at the end.
Absolutely, yes. We'll start with Simon with how do you view the current conditions for the existing year?
There's no doubt that the energy crisis has caused a delay in some of the projects that we've got in the pipeline. But saying that, what we've seen is in 2022, everybody in the growing environment and the energy crisis reevaluated their site and what they were using in energy. And what we've seen is increase in some of those quoted business to now look at all of their lighting requirements in their estate, which I think is important. So they're looking at bigger investments. And so we'll start seeing those starting to come through to actual orders and deliver them, and then on to 24 and 25, which becomes the really exciting time really for the CEA market and agriculture.
And then the similar vein, looking, Jim, at what current trading is looking like.
Well, as we covered, 2022 was difficult. Margins at UKC were down, but we took actions in that final quarter that are feeding through. We've got much higher levels of visibility throughout the business, having implemented an MRP system up at UK circuits. That's now delivering results. It's cutting down on a lot of duplication of workflow. It's giving us high levels of visibility commercially through the procurement, manufacturing, right through to the sales side of the process. So, we're pleased that those actions are delivering. On the CEA side of the market, energy costs seem to be stabilizing finally now. That's what's key to our customers. They need to be able to see in investing in our products and solutions, what sort of paybacks they're going to get. So the turmoil that we've had over the last sort of year in that area, coming to a stable period now, we do expect to see that very healthy pipeline convert as we move through the sort of second half of 23.
Okay, we've got what are the key growth opportunities across both divisions. I can take that one. It's really in the CEM side, it's sort of, as Simon was alluding to, it's moving into other markets like medical and defence, and particularly into the tier one side of it, like we are with Rentokil, really. We've also looked at sort of offering injection moulding because we do a lot of assembly work where we're sort of finishing the final product, which gives us more control over it. So offering something like injection moulding in-house as well. Many of our parts go into injection moulding, so that would make sense. And it's not a huge amount of capital spend. On the CEA side, it's really the global opportunities. We've got to be looking at areas where, they're not suffering from the energy crisis as much as we are. So like, the UAE, the United States, Canada, those sorts of markets, and really doing those through sort of partners, if you like, sales partners, rather than bearing all the costs of the sales ourselves. And then the other area is the energy saving devices, so things like the sensors and the rolling cloth where we're saving labour or we're saving energy, really working for the growers. We've got another one, which is, are there any synergies you can drive across the business? We're already setting up UKC with a line where they can make our lights, and there's actually at this moment the first manufacturing batch of sensors going through the factory in Manchester at the moment. So yeah, there are lots of synergies. We share certain things like sort of new business lead generations, marketing, even electronics engineering. We share across both sides. So yeah, lots of synergies there. But we can always do more. We've got the same MRP system as well, and other proprietary systems. So yeah, that's that one. Simon, what type of news flow can we expect over the next 12 months and sort of key milestones?
I think the key for us to grow as globally is to make sure that we've got partnerships in various countries around the world to sell our products through. I think it's the most sensible way of keeping costs low, but also expanding our product range into countries. So I think you will see more partnerships coming through. We're also always on the lookout for acquisition opportunities as well, going forward, which is really important for the business, not just to grow organically, but also through acquisition. I think we'll also see other awards coming through that we've applied for, and also other news, which is, you know, how developments are going and with customers and contracts coming through, continuing signing, if it be CM or CA division contracts, to extend the forward orders and the revenue that we deliver each month.
And Jim, can you provide more detail regarding the cash position?
Sure. So recently, having gone through a fundraise, we were reassured by the market that we raised over 1.5 million gross proceeds. We do see that as we ramp turnover, an increase divisional turnover in the CEM division, that our aim towards cash self-sufficiency will move through in financial year 24. That's one of our absolute planks of focus, that, you know, we do want to become cash generative and self-sufficient. So that fundraise was very important, and we were reassured and very thankful to our shareholders, who we look forward to continuing working with closely over the months and years.
I think you need to be very careful how you answer this one, Simon. It's how would you describe life on the market to date?
Hard work. I think for a small team as we've got, you know, we haven't got a lot of management with us. It's more boots on the ground and manufacturing. You know, we've got just over 80 employees in the whole group. But I think at the end of the day, it's a learning curve. It's something you learn every day. There's an awful lot of work which requires for the city. But we continue to make sure that we give as many updates as possible. But at the end of the day, it's in the results. It's keeping that revenue continuing to grow, which is really important, as we have done in 22, and also focusing on for 23. And turning the business into a cash generative business is our focus, and where really the management team have been used to driving businesses before into cash generative and growing businesses, which will attract more investors to us. And we believe we're in the right space to do that. So we're very excited to continue doing that. Okay,
thank you. What sets you apart from competitors? Well, I can take this one. I think on the CEM side, it's very difficult to differentiate. I think what we focus on there is building long-term relationships with our customers. You know, a lot of them 11, 12-year sort of relationships. So it's about being reliable, being transparent, particularly at the moment when we've got sort of lots of either these bad news on costs or on lead times that we've got to give customers. We've got to give them other options, and sort of so that we feel like we're giving them somewhere to go. And that's really, we've done really well there. We've actually taken quite a bit of work from other contractors where they were kind of saying, the computer says this is the price and this is the lead time. We're striving to find a better solution, if you like, that's more favourable. On the CEA side, really what we're doing is we're creating a bespoke solution for them that's really focused around what is the environment that they're growing in, what type of environment is it, and developing the product there, rather than with some of our competitors. They've literally got a price list with a load of brown box items on it, and this is the nearest fit to what you want. So it's a very different sort of approach, if you like, really. One for Simon, what could the business look like in 3 years' time?
I think in 3 years' time, I think it's, you know, the CEM side of the business continues to grow with our partners that we already have in the business. So it's making sure that we look for also the next tier up, as I mentioned in the presentation, with the equipment that we're investing in. So we see continued growth there. And in the CEA market, in the controlled environment agriculture, we really see, you know, I think we'll see a big step change in how we look at food and where it comes from, and the more importance to the general public, and making sure it's available all year round. But it tastes good. You know, when you import food like we do as a country, 70% imports, the food doesn't taste as good as it does if you have a strawberry which is grown in the UK. And I think we will see a lot more importance. I think the government will invest more, and I think more companies will come out to be growing in these hybrid buildings, if it be polytunnels, glasshouses, or vertical farms. And we'll see a real shift change to growing more locally, whatever country you're from. I think we'll see that, and that's what we see. So I think it's a good place for business to be, and the products that we're selling. And I think we'll focus more on the turnkey solution for our customers and providing those products in.
This question, it relates really around recent news where you've seen on the news there's lots of photos, pictures of empty supermarket shelves and things like that. And this question is really about how do our products support the growers? I guess what the main thing is on things like the sensor grow, we're helping them save energy, which is really vital at times. Some of them, we've heard stories of up to 9 times increases in their energy prices. So if we can use the sensors to direct the right amount of light, called DLI, to the crops, it means their lights can be tuned down when the DLI is satisfactory. So they're only using the minimal amount of energy that they need to. And then things like advanced grow, the golden cloche, you know, by extending the seasons, it's very, Simon has said earlier, it's very difficult to get staff to work in these places. And what they don't want to do is let them go at the end of the season, because they're never going to get them back again. So with this, what this allows them to do is retain a smaller number all the year round and keep them, you know, occupied all the year round, if you like, which has been a real benefit for them on there. So there's a couple of examples there. Do we see this growth continuing? I think that the large forward orders that we've seen, traditionally we used to be on something like, you know, 3 or 4 months worth of forward order books. We've now got around about a year of forward order books. And that a lot is driven by the fact that they know that there's shortages, so they want to get their orders in early. So that will obviously, as supply comes back, tail off a little bit, but it'll be countered by another trend that's been happening, which is, you know, people want to reshore. They don't want to have that risk of items sat in the Far East. The other issue is that, you know, that they're more inclined to dip into the grey market than we would be in the UK. So, you know, in the grey market, you don't really know what you're buying. You don't know what's inside that chip. So, you know, I think from a quality and a trust perspective, there's been a lot of reshoring going on, which should offset that sort of drop as time goes on. So the usage is not changing. It's just well, you say that you've got electric cars and things like that, so usage is increasing in that market as well. I think in CEA, what we're looking for there is that latent demand coming back, a bit like after COVID. If nothing's been happening in CEA for 18 months because of the energy crisis, the word we're getting is the projects are not being cancelled, they're just being put on hold. You know, if they come back, that latent demand should follow with it. That's what we're sort of hoping for. We've got a question here about who do you see as your primary competition. We've got a couple of questions along that theme. In the CEM side of things, it's very local. You know, there's lots and lots of companies like this, so it's quite a local. Our sales reps are by region rather than globally. So our competition in there would be somebody around the corner. So, you know, there's a company called UK Electronics, which is quite similar, but they would be our primary competition. On the CEA side of things, it would be the Philips and the GE that are producing the brown box items, very competitive, but, you know, we are kind of alongside them in price most of the time. And then in terms of, like us, where we're very differentiated in terms of science-backed and very bespoke, it would be somebody like Unispectra in Sweden. But again, I think we can kind of beat them on price because they manufacture in Sweden as well, largely. So yeah, they would be our main competitors. I've got one on. Sorry. There's one about what is the interest of ICL. That one is really around the measurement of nitrous oxide, and this is a partnership with Dyson Farming plus another 6 growing groups as well. And really, this is really exciting because it takes us into outdoor growing. It's not just CEA, it's outdoor growing as well. So it gives the sensor another kind of job, if you like. So So that's what they're interested in there. It's early days with that one yet, although it's progressing very well with the Dyson Farming Group and the other consortium there. So there'll be stuff coming out later on in the year on that. One for Jim, I think. Can you confirm the number of shares issued is 333 million 050?
Correct.
4 million. That's a long number, that.
Yeah.
So, and I think, yeah, have we got any more questions?
Andrew, I think that's all of them. I think you've addressed all of those questions from investors. And of course, the company will review all questions submitted today and will publish those on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Simon, could I just ask you for a few closing comments?
Yeah, I think it's been a difficult 2022, but we have managed to make sure that we invest in our product range and our 3 launches that we did last year, which is really important. We still kept and managed to grow in difficult times over 10%, which is important in revenue. We're this year making sure that we're focusing on margin and getting to that cash generative position, which is really important in 24 and 25 and onwards, so that we're generating that cash as a business, as we've spent an awful lot of money on developing a product range in a new market. And we'll continue to look at acquisitions moving forward, so that we can grow not just organically but through acquisitions as well. So we're open to that as well going forward. So we think the market, we're in a good place as a business. We've got the new investment of 1.5, just over 1.5 million that we raised, and so we're excited about going forward. We know what needs to be achieved, and we've got the right team to do it.
Simon, Jim, Andrew, thanks once again for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Light Science Technologies Holdings PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.
Thank you.
Thank you very much.